Friday was an important factor in showing us what investor sentiment was doing once the Dow came back down and tested the T-line. Notice the hammer signals. Hammer doji type day, an indecisive day. Followed the next day on Friday with a gap up. Again, that gap up from an investor or from an indecisive day tells you they've made their decision and they've made it with good strength. So not only did they gap up from a hammer signal, that was an indecisive trading day, a hammer doji, at the same level it bottomed before and off the 50-day moving average. The fact that they gapped it up above the T-line and now is trading above this downtrending channel is a good indication that the market was moving sideways until the 50-day moving average caught up. Now the probabilities are extremely strong that as long as this trend stays above the T-line, we're going to still have a lot of more uptrend in progress. This makes patterns like the J-hook pattern very relevant, as our recommendation on REN was to buy. There's our left-right combo, another very strong reversal signal. And note how when it pulled back indecisively, it couldn't close relatively with any strength below the T-line. This told us that there was a new breakout. So we have wave 1, wave 2. Now we're in wave 3, which will be the same magnitude as this trade right here. That same scenario can be applied to different sectors, like Nugget, the gold miners three leveraged ETN. Notice the left-right combo followed by a gap up doji. And what's our simple rule of a doji? The price is usually going to move in the direction of how they open after a doji. Another gap up, so we have gap ups from an oversold condition. We have a bullish doji sandwich, which is a good indication they're going to head higher, probably at least filling this gap and probably coming up to the 50-day moving average. That made our recommendations on gold stocks more relevant because the whole industry or the whole sector is starting to move very positive. And it also helped us stay short on lean hogs. Notice again the bullish engulfing signal right smack dab off the 50-day moving average. You can see this has been in a downtrend. They tried to bring it back up to the 50, failed, and the big bearish engulfing signal that closed below the T-line now followed on Tuesday with a gap down is a good indication that there might be enough strength to the downside that we're in a wave 1, wave 2, wave 3 taking us much lower. Again, this is nothing more than analyzing what's actually happening in investor sentiment, which becomes more relevant when you can see what's happening right at a specific support and resistance level. That'll be it. We'll see you in the chat rooms.